Hello guys, Sat Shri Akal, welcome to my channel. Let us talk about the expenditure method, also called as the income disposable method. So in expenditure method, the domestic territory is divided into 4 economic units, that is household, government, firm and rest of the world, which together combines and give us the GDP at MP, that is gross domestic product at market price. So there are 4 components under this method. Firstly, private financial consumption expenditure, household consumption expenditure plus non-profit institution serving household plus private financial consumption expenditure in domestic market together gives us the private financial consumption expenditure. So private financial consumption expenditure in domestic market can further be given into 2 parts. Firstly, direct purchase made by residents in abroad minus direct purchases made by non-residents in domestic market. Second component is the government financial consumption expenditure. The third component is final investment expenditure, which is also called as gross capital formation. In case we are given gross domestic fixed capital formation, then we'll have to add change in stock, that is given by closing stock minus opening stock. If we'll add change in stock in domestic fixed capital formation, we'll get gross capital formation. And the fourth component is net exports, that is exports minus imports. These 4 components together give us the GDP at MP. And the question might provide us net capital formation instead of gross capital formation. In that case, we'll be able to calculate NDP at MP. Keep this in mind. Let us talk about the income method, which helps us to calculate the net domestic product at factor cost, that is NDPFC. So basically income method has 3 factors. Firstly, income from work. Second, income from property and entrepreneurship. Third, income of self-employed. So income from work is generated from labor. So basically here employers are entitled to provide contribution to employees. So contribution to employees can be further divided into 3 parts. Firstly, wages and salaries in cash, wages and salaries in kind, and third, employers' contribution to social security schemes. So wages and salaries in cash includes basic pay, DNS allowances, bonus, commission, profit sharing, etc. Wages and salaries in kinds includes free food, free accommodation, cab facilities provided by the employers. An employer's contribution to social security schemes includes provident fund, gratuity, pension plans, medical insurances, etc. So please keep in mind that it only includes employers' contribution to social security schemes. In PF, contribution is made both by the employers and employees. So we'll only include employers' contribution. We'll not include employees' contribution if it is given in the question. Income from property and entrepreneurship is generated from land, capital and entrepreneur. So operating surplus is calculated by adding rent, interest, royalty and profit. So rent is basically something that is generated from land, interest is something generated from capital, and profit is earned by the organization. Profit is further divided into 2 parts, profit tax and profit after tax. So the other names could be corporate tax, business tax, and profit after tax is calculated by adding dividend and undistributed profits. So the other names for undistributed profit could be given retained earnings or savings of corporate sector. Third and the last component is mixed income of self-employed. So self-employed is someone who is outside the traditional employer and employee relationship. So for example, doctors, farmers who are not employed by somebody but rather they earn for themselves. So adding up these three factors together, that is compensation to employees, operating surplus and mixed income of self-employed, gives us the NDPFC.